The sponsor of today's video is Webull. Simply use the link down below my description box, deposit any amount of money, and we each get 5 stocks. It's that simple, and by the way, it's limited time, so get on it. Use that link. Enjoy. Now let's get into the video. Alrighty, guys, so I want to go over a company, a stock here that's been doing very well recently. I've been getting a lot of questions about it, and quite honestly, I think it's a trap. I think this stock, this company has been doing well in the short term, but I don't think it's sustainable, and I want to break it down in this video. So sit back, relax, hit the like button, subscribe, check out my Patreon, link down below if you guys want all my buy, sells, call outs, morning update videos, and if you guys want more access to me throughout the day, all of that's on Patreon, link down below. And with that being said, let's talk, because again, I've been getting this question a lot. Stas, are you buying the stock? Are you staying away from it? And I want to break it down today. So the stock in question here is ZIM, also known as Zim Integrated Shipping Services. And just to give you guys a little bit of price action history here, this stock has gone up from $9 back in the beginning of 2021, and it recently hit a high of $62 in the beginning towards the middle of September, just about 3 months prior to me filming this video. And this company, Zim Integrated Shipping Services, is an Israeli-based company, right? It operates as fleet and a network of shipping lines offering cargo transportation services on all major global trade routes. It also offers multimodal cargo handling, tariff management, schedule information, and other related services supported by the company's local offices and representatives around the world. So in a nutshell, Zim is a shipping services company, right? And we're not going to go too deep into, exactly what they do, but I do want to break down financials, some numbers, and why overall they've been doing very well in the short term. But again, I'm not sure if this is going to last over the long term. So let's talk a little bit about some numbers here. Then we'll take a look more at the chart and go over my thoughts and kind of what it reminds me of. Stay tuned for the end of the video for that, because this reminds me of something that we went through in 2020, and it's very interesting. So as of now, their market cap is $5.88 billion. So it's not a very big company. It's not a micro cap either. It's kind of a small cap company, a little bit smaller than, the normal company out there that most people look at these days. They have a whopping 1.77 PE ratio, which is just insane. 1.77 PE ratio, and over the last 12 months, they've made $28 of EPS, and they currently pay a $10 dividend. $10 dividend, and the stock price, mind you guys, is under $50 now. It's at $49 per share, so that means their dividend yield is 20%, and out of the $28 of EPS, $10 dividend is not too crazy. In fact, the payout ratio is about a 35%, which is pretty good actually, but I'm not sure if that's sustainable. So let me show you guys quickly here on Yahoo Finance the numbers recently that have been reported, right? And you guys can see a bit more about the company here. We have market cap, again, about a little bit under $6 billion. We have the P ratio, the EPS, the crazy dividend yield right here. So let me pop up financials. You guys can see over the past 12 months, they've done $8.6 billion in total revenue, and that comes down to diluted EPS. Let's see here. That's actually not updated for the trailing 12 months. But overall, let's just say they've made a lot of money over the last 12 months, right? And they've had a one-off year where their revenue has skyrocketed, the income has skyrocketed. I mean, look, in 2020, they did $3.9 billion in revenue, and again, trailing 12 months, they've done almost $9 billion in revenue. So they've practically 2.5x their revenue over the past year. Income's up, EPS, all that good stuff is up, and that is why they're able to pay this one-off $10 20% dividend yield. Trust me, guys, the second this starts going down, if it starts going down, the revenue, the net income, they are going to cut this dividend. Trust me, I've seen this time and time again. So now that we looked at their financials very briefly, actually, let's take a look at their balance sheet too. How are they doing assets versus liabilities wise here? Total assets, $2.8 billion. Total liabilities, $2.5 billion. Let's look at current assets, current liabilities. So current assets, ooh, look at that. Current assets, $1.2 billion. Total liabilities, current liabilities, $1.15 billion. So they barely have more current assets than current liabilities. So let's see their cash. So they don't have enough cash to cover their total current liabilities. I don't like that. They have about $629 million of cash, and again, their total current liabilities are around $1.15 billion. So they don't have enough cash to cover total current liabilities. So what has been going on? Well, freight rates. Again, this company is a shipping-oriented company. Freight rates recently are extremely high, and these freight rates have been quite high here for a decent amount of time, right? We have a lot of congestion at many ports. We have a lot of, supply chain problems right now, and this has helped companies like ZIM Integrated Shipping Services. And freight rates, if you guys didn't know, these go up and down throughout the year. They kind of hike up during the holiday season, before the holiday season, as a lot of product needs to move around the world to get to people's houses, right, who are ordering the product and so forth. And rates usually weaken into the new year as U.S. consumer demand wanes and Asian output also decreases around the Lunar New Year, typically in early February, which we're getting there, guys. And longer-term contracts are negotiated between February, April, and by May the next season usually is underway, by May typically, right? And by July, spot freight rates are usually on their way back upwards. So pretty much there's a cyclical nature in these rates. They go up, they go down. They go up, they go down, right? And global freight rates are now only down about 15% from record peaks, according to Freightos, at a time when we should otherwise expect a decline closer to 40 to 50%. So freight rates typically now, as we're getting to that off-peak season, right, if you want to call it that, they're not going down as much as they normally would, right? And this time of year is where rates should be dropping, but they're simply just not doing that quite yet. So this is why companies like ZIM and other shipping-oriented companies, right, have been doing very well. But I believe that this is not sustainable. Like I said, we've seen the supply crunch. We've seen a lot of these ships being just literally offshore. They're waiting to unload, to dock, unload the product, which I believe it's just not going to be a long-term problem. This is going to be a short-term problem, short-term nature problem. And once this kind of, this congestion decongests, if that's even a word, right, which I think it is, this stock is not going to be doing as well. The company, that revenue that's very heightened, it's going to come back down to earth, and they're then going to cut the dividend, right? At least that's what I think. I think companies that pay high dividends like this, you should have red flags going off in your head, right? Because if you see a huge spike in a dividend, that means earnings are popping up, and that might not be sustainable all of the time. So that's kind of a quick little analysis here of what I think is going on, right? We have congestion, we have freight rates going up. This is helping companies like this in the short term, and this really reminds me of the oil tanker stocks. Do you guys remember in the beginning of the pandemic where we had a glut of oil, no demand for that oil? A lot of these tankers were offshore with a crap ton of oil. There were so many tankers. Everybody was like, oh, we have to buy the tanker stocks. There's one in particular, what was it? NAT, also known as NAT. A lot of people bought that. And let me show you guys what happened in NAT. Are you ready for this? Let me show you this, guys. Ticker symbol NAT. This is now down from $3.80 just from June now to $1.70. But it's way worse than that. It's down 50+% in the past 6 months. It's down way more since when a lot of people were like, oh, tanker stocks, buy these, buy those. It was back in April of 2020, it was $9. $9. Now it's $1.80. It is down a whopping 80%. So this could happen to ZIM. in my mind, there's no doubt in my mind that this could happen. You know, ZIM's now $60. Could this drop 60, 70%, go back to 20, 17, $25? Absolutely. This is where, I mean, this stock was $9 back in the beginning of 2021. It could easily lose that value. And then guess what happens? The stock is obviously going to go down. A lot of people are going to get destroyed, and that dividend is going to be cut by a lot. So overall, be careful, guys. This, in my opinion, it's seeing a one-up rise in sales, profit, dividends going up. It's not sustainable. So be careful. And with that being said, long-term wise, I wouldn't touch it. But in the short term, like I said before, this could be setting up for a decent trade, right? If we break above the moving averages here on the 4-hour chart, maybe let's say we break 52 into the mid-50s, maybe we can catch a play back up to $60, $65, which is where we were a couple months ago, and just recently, actually, end of November, early December. You know, we could go back to the 60s in the short term, but again, long term, it's just not sustainable in my opinion. So what do you guys think? Am I off base here? Do you agree with me? Let me know down below in the comments, and make sure to hit the like button, subscribe if you guys found value and you want to see more content from me, and check out my Patreon if you want all my moves in the markets. That's linked down below. Don't forget to also get your 5 stocks from Webull and your $50 from M1 Finance, also linked down below. And with that being said, I'll catch you guys in the next video. Be careful with this one. I'm telling you, be careful. And again, let me know your thoughts. I'll catch you guys in the next video. Thanks for watching as always. Keep crushing the markets. Stay safe out there. Peace out.